And we're live. Holy cow, what a market this has been. I mean, this volatility is really unprecedented. I'm actually going to say that this volatility feels as bad, if not worse, than '08 and '09. It's one thing to have a down day of 1,000, 1,200 points, but the last week and a half, tomorrow going on 2 weeks, been one heck of a run of volatility. So let's take a look down the list because we're going to talk about volatility, what to do about it, how to handle it, and I want to make sure that you are staying cool and not making panic decisions, rash moves, just really bad buy and sells. If you think about it, yesterday the Dow was up over 1,000 points. People got all bulled up and started buying, and then today Dow is down about 1,000 points. By the way, the Dow Jones, the S&P 500, these are indexes. I have to say this. You cannot invest directly into an index, but you can invest in a security that tracks or mimics an index. Boom, I said it, okay? So therefore, so if you bought yesterday afternoon, you'd be down. I mean, the Dow is down like 2,000 points since then. That is wild to me, those kinds of swings, and I've been doing this for 30 years, so I've seen a few swings. So can we blame it all on coronavirus and shortages of staples like paper towels and toilet paper and bottled water at Costco and Target in or near the affected coronavirus areas? Maybe people are starting to panic. And for you business owners out there, if you think everything is okay and your business is going to run smoothly, the people who are buying all these goods are your employees. So you might want to make sure that you have some kind of business continuity plan in place. Then we have is it Elizabeth Warren's fault? So Elizabeth Warren ends her campaign for the nomination for the Democratic ticket. So does that mean all of her followers then go to Bernie Sanders? So that strengthens Bernie Sanders' hand? Because yesterday, part of the rise in the stock market, a massive rise that it was because Biden was stealing Sanders' thunder. So Biden's more of a centrist, considered better for stocks, better for business, etc. But now it looks like it could be the Sanders coalition versus the Biden coalition, and maybe we'll get some kind of contested convention. Uncertainty is what it is. If Biden wins, do you then think that Sanders voters won't vote? Okay, enough of that. But maybe that's part of the blame. What else? Is it that the supply chains in China are either at the moment down, way below normal, or in some cases non-existent? That could be the move also. So that means if you take a look at the tires for your car, you take a look at the cell phone that you have, you take a look at your clothing, so much of the goods that we have, auto parts, aircraft parts, so much stuff is made in China. So what happens when we start running through inventories and shortages pop up? Could it be that? What else could it be? Could it be that the Fed is perceived to have made a panic move by cutting its short-term interest rates by 0.5% yesterday? That spooked people. The Fed wasn't getting around to cutting rates until Wednesday, March 18th. I think that's a Wednesday, March 18th, which is also my wife's birthday. So glad I reminded myself. So the Fed was expected to cut rates 1/4 point to 1/2 point, but they did a full 1/2 point yesterday, like 2 weeks before. So now investors are a little spooked and they're starting to think, what is the Fed seeing that we can't see? Things must be pretty bad out there. Wow, that is pretty heavy to deal with. Is it maybe the 10-year Treasury yield? Not only is the yield plunging to record lows rapidly, but it's now below 1%. We've never seen this before. That is truly an indicator of a tremendous lack of confidence in the economy. And the yield curve has only gotten more inverted, which is usually a signal that a recession is coming over the coming months to maybe a year or two. What else do we have? Corporate earnings and GDP. Estimates are subject. A lot of companies have already warned that their estimates are going to be cut. I've seen a few cuts to China's GDP, our domestic GDP, but by and large, it hasn't been enough yet. So whatever we expect from corporate earnings this year, you can basically kiss that goodbye. So maybe in that regard, lower earnings, lower GDP, maybe in that regard, the stock market's decline is actually justified. I still wouldn't be a hero here. Let's just talk about this for a second, okay? So are you dealing okay with the volatility in the market? Some people, I talk to a lot of people, I talk to a lot of clients, I talk to other financial professionals. Some people are taking it in stride. Some people are getting a little nervous. What I'll tell you is the things that you already know, because in tough times, and there's so much news and information flowing around, I feel that the best thing to do is take a back to basics approach and realize that up and down markets are a part of the long-term journey of investing. So if you are someone who has taken a shot that's maybe really big parts of your portfolio on a handful of individual stocks or something aggressive or speculative, you may have something to worry about. It's tough to say. Look, I remember when Amazon went from 100 down to 7 in the tech wreck of 2000. Now, if I recommended a stock to you at 100 and it lost over 90% of its value, would you be mad at me? Well, maybe. You'd be mad at yourself if you bought that. You might not. You probably wouldn't hold on to it. But you saw what happened with Amazon. So the important thing is, know what you have. Make sure you're doing your own homework to make sure that you can stay confident to hold through volatile times. And if you don't know how to do the homework, and you don't know how to do the research, and you don't know how to make that determination, I have news for you. Individual stocks are probably not for you. You probably have no business at all being in an individual stock. By the way, I'm Mitch Goldberg with Client First Strategy. If you're watching this in the live right now, hey, if you have a question, I'd love to hear from you. So go ahead and ask me any questions you have about the market, volatility, etc. Disagree with me, agree with me, whatever. That's what the comments are for. And I'd like to welcome you if you're watching this in the replay, because if you are, go ahead and ask a question in the comments as if you were watching this in the live. I'll take a look, I'll check, I'll get notifications. So it's really important that everyone has an opportunity to feel a little bit more sane in this market. So one of the things I'd like to do is I'd like to bring in other friends of mine. Carlos and Ivana are two people who I know personally. We speak often. We're connected on social media. We've met in person. They are also financial advisors. And you're starting to see a commonality. You know, don't panic, stay calm, be diversified. By the way, whenever we say diversification, we have to say diversification is a strategy that is used to help mitigate risk, but it does not protect your account from going down in a generally down market. Just have to get those disclaimers in there to make sure that my compliance peeps are satisfied if you're watching, and they'll check out the replay later. So do you think, Ivana, that for some people it's time to go from defense to offense in a way?
Oh, definitely. Maybe take one step at a time, slowly, carefully, but it's interesting you asking. I just had a conversation with the 401k provider, and we had our annual review. So if you have 10 years and more for your money to be invested, I think the strategy of Dollarcost averaging remains sound regardless of this volatility.
So you have to just keep on sticking to your plan, because we can't control the external events. We can't control the coronavirus. But if you're, what I tell people, even if you're mid 50s, really for anyone who's in a 401k plan, you stick with the monthly investing, or whenever your paychecks hit your pay period, right, Carlos? We don't stop the monthly investing, and you are able to take advantage of the down market, because this is not going to last forever. In a lot of ways, a lot of people expected a reset in the financial markets, and it looks like we're finally getting it. And it's nobody wants to go through the pain of a downturn, but you can't get a reset without it being reflected in stock prices. Look, to me, when you buy, I keep looking over here, by the way, because I have a screen that I can make sure we're all on the screen. But Carlos, can you hear me okay?
Yeah, now I hear you fine.
Okay.
I'm back.
So, Carlos, what would you recommend to somebody who's like, 25, 30 years old, they've got a 401k plan, they're just getting started, and what do you tell them? I mean, is it the same basic advice or anything like overly unique?
Look, I think that you got to look for opportunity where it is, and I think that you need to find, as a 25-year-old in a 401k plan. Now you have to just get yourself on a regular investing schedule. The thing that I believe is probably a decent opportunity is international investing right now. When you take a look at the history, especially the last 5 years, the U.S. stock market has really beaten the international markets as measured by the EFA. And so, if you're an investor and you're putting away now, I think that's where you have some, good opportunity. And that's where you want to start to allocate money,
Okay.
and start to save.
All right. And Ivana, just want to throw this back to you. Like, we heard like all about the Robinhood outage the last couple of days. And, Robinhood is kind of viewed as, when you look at the top stocks being bought and sold on Robinhood, that's what the younger set are doing. And then when TD Ameritrade or Schwab report the heavily traded stocks in their platform, that's more or less what the boomers are doing, or I'll say the Gen Xers, because I'm a Gen Xer, not a boomer. Just want to let you know. Okay. So, but for people who are trading or investing in individual stocks, is this too tough for them, or do you think it's, worth it to take a shot? Because we have a lot of different kinds of clients, and sometimes clients want stocks, sometimes they want packaged products. What do you tell them?
I think it depends on the individual client. It depends on so many factors. What is the client's capacity? How much risk they need to take? But look, as a financial planner, the day trading, I'm not sure if that is a big part of a financial plan. You need to be understanding what you're buying, when and why. So you just got it in your entrance to this program that you must know what you're buying. So do the analysis of these companies that you want to own, and perhaps purchase a few shares of the securities that you feel comfortable with and are ready to hold on for the long term, because you might get a good result from that. But as far as financial planning, you need to look at the basics. You have to have your emergency money set aside, and your investment money should be viewed differently. That's my strong belief. So day trading, it depends on a particular client and depends on their capacity.
Sure.
And I think that this is truly it. Warren Buffett said, and by the way, he just bought $45 million worth of Delta last week. He had a file. Okay, you could have bought it cheaper today, right?
Sure.
You think he's worried? He's not worried about it. But this is what he said. He said, in the 20th century, the United States endured 2 world wars and other traumatic and expensive military conflicts, the Depression, a dozen or so recessions, and financial panics, an oil shock, a flu epidemic, and the resignation of a disgraced president. Yet the Dow Jones rose from 66 to 11,500. Okay, and that's what when you're allocating your capital, okay, you got to take, that kind of approach with that bucket of your money. And you have to view periods like this that we're seeing on the TV as opportunities.
Yep. I say, as long as you don't need your money over the near term, you really don't have anything to worry about. I put out a little post the other day, and I redid it today. The two ways to inoculate yourself from downturns in the market and worrying about the market is having a long-term view, which we all agree, we've all talked about that. That's like the basis of our entire conversation, actually, is the long-term view. It keeps coming back to long-term. So people are watching will, I guess, see a consistent pattern. And again, this is something that most investors have heard before, but we are creatures of emotion, and people get nervous. We need reminders, and we need a little hand-holding. But you can beat any down market with time. And if you are going to take a gander on something now, you want to take a shot, be it an exchange traded fund or an individual stock, whatever that may be, to me, make sure that it has a proper fit in your overall portfolio, either for the sake of diversification, for the sake of adding to dividends, whatever the reason is. So this way, when a new stock or a new position has a proper place in your portfolio, it no longer matters if it's up or down, because you've already done everything right. Look, the whole point of that was so you could hear from other advisors as well. And, aside from Carlos and Ivan, I've spoken with so many advisors in the last couple of days, and you're starting to see, the pattern. It's consistently the same thing. Long term, know what you have. If you can't really figure out what you have, or you're not really good at the research, then individual stocks might not be for you. But the most important thing is you just have to give it time. You have to make sure everything fits properly in your portfolio. And that's really about it. The ups and downs are a normal, natural part of investing. And if you are investing for the near term, then look, that money should not be in the market. We had a really good market performance in 2019. It's not too late to raise cash if you need it for short-term financial obligations. And other than that, I want to thank you for joining us. If I'm going to sign out, I hope this helps you with your understanding of stock market volatility and helps you, avoid any hasty decisions that could potentially harm you for the long term. Okay. Short-term decisions do not really work well for long-term results. Okay. I said it. All right. I'm going to end the broadcast now. Thank you.